All right, today we're going to crack open a brand new playbook for the Indian stock market. We're looking at 2026. The market is flying high, but a fascinating new report suggests the old winners might not be your best bet anymore. So let's get right into it.
So you see the headlines, right? The Indian market is hitting all-time highs, which sounds amazing. But the huge question this report asks is, are you actually looking in the right place for that growth? The answer, you'll see, might surprise you. Here's our game plan. First, we'll unpack the market's new puzzle. Then, we'll dive into the massive shift happening just beneath the surface, something called rotation. After that, we'll spotlight the specific sectors that are winning right now, explain a really cool barbell strategy for your portfolio, and wrap it all up with the single biggest takeaway for 2026. All right, first up, the market's new puzzle. And it really is a puzzle, because on the surface, everything looks fantastic. But when you start to dig just a little bit deeper, you find a major change happening under the hood. And here is that headline number. Just look at it. As of early 2026, the Nifty 50 is cruising past 25,700. You'd think it's smooth sailing for everyone, right? Well, that big, shiny number is actually hiding a much more complex story. And this right here, this captures the whole shift perfectly. For years, the playbook was super simple. You just invested in India's massive, export-driven IT sector. But that's the old playbook. The new reality is that global AI is causing some serious disruption, creating major headwinds for those old giants. Okay, so if the old reliable engines are sputtering, where is the new power coming from? This brings us to the absolute heart of the report's argument, the big shift, which is all about a concept called sectoral rotation. So what is sectoral rotation? It's actually a pretty simple idea. It just means moving money out of sectors that are facing challenges, like IT is right now, and moving it into sectors that are really set to thrive in today's economy. It's all about being nimble and following where the growth is actually happening. So where exactly is that capital rotating to? This quote from the report lays it out perfectly. The money is moving away from global-facing tech and flowing right into India's own domestic story. The report highlights three key areas that are now in the driver's seat: defense, renewables, and banking. So let's zoom in a little. Let's actually meet some of these new market leaders. The report highlights three really specific companies that bring this whole story to life. Taking things off, we have what the report calls the defense giant, Bharat Electronics, or BEL. This company is a direct, powerful play on India's huge push towards self-reliance in the defense industry. And wow, just take a second to look at this number. An order book of over 75,000 crore rupees. Now that's not just a big number on a slide. What that really means is years and years of guaranteed revenue. It gives the company this incredible stability and a super clear view of its future growth. So why BL? Well, it's sitting in the perfect spot. It's getting a huge boost from an 18% hike in the defense budget. It's focusing on the really high-tech, high-value systems. And of course, it aligns perfectly with the government's entire Make in India initiative. Next, the report uncovers what it calls a hidden gem, NTPC Green Energy. This one is for investors who are looking to tap into one of India's biggest and most important long-term shifts. This is a pure play on India's green energy boom. It's got this super ambitious goal of hitting 60 gigawatts of capacity by 2032. And the report says its valuation looks pretty cheap next to its global peers. It's basically a direct way to invest in India's net zero future. And finally, for anyone out there who loves strong fundamentals, we have the value play, OREC Limited, which is a key financier for India's entire power sector. This chart tells the value story beautifully. Its price-to-earnings ratio, which is basically how much you're paying for its profits, is incredibly low at just 6 times. Its return on equity is over 20%, which means it's a highly profitable business. And on top of all that, it pays you a dividend of over 4% a year just to own it. That's a classic value investment. Okay, so we've got these great individual ideas. But how do you put them all together? Well, the report proposes a really clear and clever approach called the barbell strategy. I want you to picture an actual barbell. On one side, you have the heavy, stable weight. That's about 60% of your portfolio, your anchor. And on the other side, you have 40% dedicated to those higher growth, tactical picks, the ones that are really designed to outperform the market and generate what investors call alpha. Here's how it works in 2 simple steps. First, you build your core with proven leaders like ICICI Bank and L&T for stability. Then, you add your growth satellite, targeting that high alpha potential with the very names we've just been talking about, like BEL and NTPC Green. It's a strategy that perfectly balances safety with opportunity. So, let's bring this all home. What is the single most important message you should be taking away from this 2026 outlook? The big idea is this: it is time to shift your focus. The report argues that the real story, the real growth, is moving away from globally exposed IT and moving towards India's own domestic champions in these key sectors like defense, energy, and banking. Of course, no strategy is without its risks. The report is very clear. Keep a close eye on the Reserve Bank of India. If they take a hawkish stance, meaning they get aggressive with raising interest rates to fight inflation, it could definitely slow things down for a bit. It is the most crucial variable to watch. And that leaves us with one last crucial question to think about. This entire playbook is a bet on the strength of India's domestic economy. So, what single global event could be powerful enough to throw this whole story off course? Something to chew on. Thanks for joining us.